Let's talk about the apartment market in Lebanon, Pennsylvania. For a while now, it's been a story of really steady growth. But if you're a renter or a landlord there, you've probably felt this subtle shift in the air. So today, we're going to dig into why this seemingly strong market is starting to feel just a little bit off balance. And that really brings us to the big question, right? Why does the Lebanon apartment market feel weaker than it actually looks on paper? I mean, the numbers seem fine, but if you're out there in the thick of it, you're definitely noticing more for rent signs. There's just this general sense that things are slowing down. So let's unpack what's behind that disconnect. It really all starts with this fundamental contradiction. The market's recent history is telling one story, but the feeling on the ground today, it's telling a completely different one. Let's start breaking down that puzzle. Yeah, from the outside, everything looks pretty normal. You see solid buildings, full parking lots, business as usual. But for renters, the experience has totally changed. All of a sudden, there are more options, there's more availability, and you get this feeling that the power dynamic is kind of flipping. These two realities are bumping up against each other, and that's exactly what we're here to explore. So here's the crucial point. While the long-term trend has been really positive, a new short-term shift is creating a completely different dynamic. It's like the ground is moving underfoot, even if the buildings themselves look exactly the same. Now, this isn't about a crash or anything like that. It's about a fundamental change in the balance of power. Okay, so what is the first real concrete sign of this shift? Well, it's the one indicator that clearly shows the power balance is tilting away from landlords and, a little more towards renters. Let's take a look. The answer is actually pretty simple. Rising vacancy. I mean, for years, finding an apartment in Lebanon was like a competitive sport. Now, for the first time in a while, there are actually empty units sitting around. And this might seem like a small change, but trust me, it's sending these little shockwaves through the entire market. So what does higher vacancy actually mean for you? Well, if you're a renter, it's fantastic news. More choice means you've got more leverage. Less pressure means you might actually find a better deal. For landlords, though, well, the easy days are over. They now have to really compete for good tenants, and that's a huge shift from the last few years. The whole market is finding a new equilibrium. And this, of course, leads to the next logical question. Why is vacancy rising in the first place? What is causing this shift? Well, the answer lies in one really powerful, overarching force that's been building for years and is just now really making its presence felt. The main driver here is new construction. We're talking about a flood of new apartment buildings, ones that were planned way back when the market was red hot, and now they're all opening their doors right around the same time. This isn't a trickle, it's more like a tidal wave of new supply hitting the market. Think of it like this. Imagine a chart in your head. For years, the demand for apartments in Lebanon was a line just steadily climbing up. Meanwhile, the supply of new units was a pretty flat line way below it. That gap? That was a landlord's dream. But recently, a geyser of new construction has just erupted, sending that supply line spiking way up, and it's actually crossed over the demand line. We are living in that crossover moment right now. So let's just put the story together in a nutshell. The cause? A booming market that encouraged a ton of new construction. The effect? All those new buildings are now open for business. And the consequence? The market is kind of flooded with new apartments, and it's just going to take some time to absorb them all. This is that rebalancing in action. But here's where it gets even more interesting. This new supply isn't hitting every single property in the same way. In fact, it's kind of splitting the Lebanon apartment market into two very different stories. So, you see, it's not really enough to just say the market is softening. We have to be way more specific. This wave of new construction is creating a real battleground in one particular segment of the market, while other areas, they're staying relatively untouched. Let's break this down. Right in the middle, you've got your mid-range apartments. These are the properties feeling the most heat from all this new construction. They're trying to compete with brand new buildings that have all the latest and greatest, which means, well, renters can find some fantastic deals here. But at the very top and very bottom of the market, things are a lot more stable. High-end luxury places and those older, more affordable units, they're just less affected by this new wave of competition. Okay, so understanding this rebalancing and this split in the market is one thing, but what does it actually mean for you? Let's talk strategy for how to navigate this new environment. So how do you play this new market? Well, if you're a renter, it's time to go shopping. Seriously, the mid-range market is a renter's market right now, so don't be afraid to negotiate a little. For owners and landlords, the game has changed. It's not just about finding new tenants anymore. It's about keeping the ones you have. And for investors, look, the easy money is gone. Success now is all about patience and finding those little pockets of stability in a market that's in flux. So what's the big takeaway from all of this? The Lebanon apartment market isn't in trouble, not at all, but it is in transition. It's moving from a period of just straightforward, rapid growth into a more mature, more balanced phase, one that's defined by competition and by choice. And understanding that shift, that's the real key to making smart decisions, whether you're looking for a home, managing a property, or investing for the future.